With over 35 years international banking experience, which includes commercial, investment and retail banking, as well as microfinance, Ms. Kamil's 3-year tenure with the State Bank of Pakistan started in August 2020. As well as being appointed the first female Deputy Governor of the State Bank of Pakistan, Ms. Kamil was also the first ever female president of a private sector commercial bank. Ms. Kamil has an MBA from City University London and a degree in business from Kingston University in the UK, where in 2019 she was awarded an honorary doctorate degree in recognition of her outstanding contribution to the banking sector and support of inclusivity in business leadership. She's also a certified director from the Institute of Business Administration in Karachi. I'd now like to invite Ms. Kamil to share an update on the impact of COVID on the region and to highlight the work the State Bank of Pakistan has been leading on climate change, green finance and financial inclusion. Ms. Kamil, the digital floor is yours.
Thank you very much. And I'm very happy to be here and happy to be able to talk to all the panelists here and to the representatives from 100 countries that are part of this conference. I would like to really thank you for organizing the Ethical Finance Summit in very challenging circumstances. And I'm really particularly interested in the theme, which is financing a sustainable future, climate and beyond. And I'd like to talk a little bit before I start about the South Asian region as well. South Asia, as you know, has a quarter of the world's population. And sadly, over a third of its citizens live in poverty and hunger. And this is an enormous challenge. Before COVID-19 hit the global economy, South Asia was one of the fastest growing regions in the world, with an average growth rate of 6%. Although the financial trajectories have varied across the various countries in the region has experienced remarkable advances. In particular, I'd like to say that in the last 30 years, South Asia has been able to pull 200 million people out of poverty and has significantly raised living standards. Pre-COVID, entities like the Asian Development Bank suggested that single-digit poverty rate was possible within a decade. Of course, as you know, COVID-19, and particularly the third wave, has been a huge economic shock and a health shock in the region in varying degrees, but it's certainly there and is a concern. Obviously, there are challenges on health facilities and livelihoods, and has created multiple challenges for policymakers. As the issues that face South Asia are similar, I'd like to talk a little bit about Pakistan's experience and how the government and the central bank attempted to handle this challenge, and a challenge that was unknown, and we had no textbook answers to this. So first and foremost, it was a health challenge, which was tackled in a variety of ways. And we are happy that it has so far been contained, although we are now in the third wave. And as far as the central bank is concerned, the team worked really very hard and came up with some measures that I'd just like to mention shortly. The first was that we very swiftly reduced the policy rates by about 6.25%, which was amongst the biggest cuts in the world. Then we worked with the banks to encourage them to put in loan deferment and rescheduling, which amounted to about close to $6 billion US. We also gave refinance schemes to the banks, first for the health sector, which is obviously first and foremost most important, for the purchase of COVID preventive and protective equipment, for the establishment of wards, and also to establish hospitals. And the funding that we provided to the bank went to about 49 hospitals and made a big difference. Then we also supported businesses so that people would not be laid off. So to prevent the layoffs, under our estimation, under that scheme, about 1.6 million employees were protected. with approved financing of 234 billion rupees. And lastly, most importantly, because we understand that everything we do has to be medium term and sustainable, and we understood that investors were very risk averse at these uncertain times, we provided financing to approved projects of about 435 billion, coming to about 2.5 billion rupees, and up to about a 1% of GDP, to about over 600 projects all over the country, which then actually imported or took local equipment and will serve us well as we move into the future. Now I'll turn a little bit to the topic at hand, which is the financing of a sustainable future. And of course, as we all know, balancing sustainable development while pursuing an agenda for economic growth is a challenging task, particularly in countries such as those in South Asia, where we need to balance a need and a desire, which is quite understandable, for urgent and quick growth, with an equally important desire for ethical financing, so that we encourage the adoption of growth strategies which don't compromise long-term stability. So I'm going to talk to you on three levels on this. First of all, obviously, on climate and green financing. And secondly, because we cannot have sustainable growth if we don't have financial inclusion, because then we will have much more of the elite capture and skewed development. And lastly, I'd like to talk about areas of market failure, because there are obviously a lot of asymmetries in our market, all our markets, where certain segments of the market which are crucial for development are not being adequately served by the financial sector, and therefore encouragement and incentives and targets in many ways are needed. So going on to green banking and sustainable financing to combat climate change, the growth of green finance is a result of the realization that the key role is being played by financial institutions in mitigating the hazardous impacts of industrialization. And since the growth models of Asian economies have been resource and carbon intensive, these challenges are all the more significant, even though our carbon footprint may not be as high as those of the developed countries. And the South Asian countries are highly vulnerable to climate change, particularly in the areas of agriculture. And we need economic, social, and governance readiness to improve our resilience. Amongst the challenges which I personally feel we face in the region is to bring it to the top of mind in our financial institutions and to integrate ESG factors in their decision making in a systematic manner. And the struggle is always to move beyond lip service. So I think for this region, we need to bring that up and emphasize and win over minds to its importance. It's quite encouraging that authorities in all the countries in South Asia have taken a lot of measures to enhance the focus of banking and financial institutions. So there are strategic national level roadmaps, but also we've incorporated environmental and social risk management in the overall credit risk management frameworks. We've got in-house environmental management, the disclosure and reporting of green banking activities, priority sector lending by requiring banks to allocate a minimum percentage of their financing to green and sustainable projects, and the provision of liquidity support through low-cost refinancing schemes for green and sustainable finance projects. And last of all, but most quite important, macroprudential support and incentives. If I was to give you an example of Pakistan, we are currently working along with the IFC to counter the effects of climate change and increase the share of green financing under a sustainable banking project. The project operates at 3 levels, which develops implementation tools in support of our green banking guidelines, raising awareness and capacity building in the banking industry, and of course, creating market capacity to train and convince, I might like to add. The State Bank has also introduced green banking guidelines. We began this in 2017 to encourage banks to formulate a policy for environmental risk management, increase green financing portfolios, and reduce their own carbon footprint. We are also now planning to issue mandatory instructions regarding environmental risk management component of these guidelines after receiving a response from the banking industry. We tend to try to do everything in a collaborative manner. So far, under our refinance facility, which has been actually very successful, 500 projects have been financed with a total capacity of 850 megawatts, which is a significant portion of our total energy production and consumption, amounting to about 36 billion rupees. I'll turn now to what is very close to our hearts at the central bank, which is financial inclusion. Because if the majority of our populations in the region, or even if a significant portion are not financially included, we will never have sustainable growth in the future. And the first area is Islamic banking. Islamic banking is very close to ethical finance, as it is faith-based, in the sense that every Islamic financial transaction has a certain economic purpose and activity, and it inculcates transparency and fairness as a priority. Secondly, Islamic banking and finance now needs, in our view, another leap of growth, and to take it to bring a positive change in the financial system, to focus on value-based intermediation and socially responsible investment. The promotion of financial inclusion through Islamic banking is therefore an integral part of our strategy in Pakistan. In order to steer the growth of Islamic banking on sound footings, the State Bank has been providing guidance through the issuance of strategic plans for the Islamic banking industry. We have recently issued our third five-year strategic plan, covering the period 2021 to 25, for Islamic banking industry to make Islamic banking 1/3 of the overall banking industry. This really fosters inclusion because there are a number of segments of our society who would prefer this mode of banking. This gives a consensus agenda and a strategy to take the industry to the next level. This strategic plan is based on 6 pillars, and I'll just mention a few of the important ones. 1, to strengthen the legal landscape, enhance the conduciveness of the framework, and reinforce comprehensive Sharia governance frameworks, improve liquidity management, and expand outreach and market development. And last of all, of course, bolstering human capital and raising awareness. Because the lack of awareness is amongst the major challenges that we face, not just in Pakistan, but in the region. The second thing, which is very important to us, is our digital initiatives. Because we realize that in a country of over 200 million people, we cannot use branch networks and bricks and mortar to enhance financial inclusion. So we developed some time ago our National Payment System Strategy, which sets out a roadmap and makes recommendations to design a national payment system. Digital financial inclusion is one of our major policy objectives. I've been working on a number of technology initiatives to improve the digital banking and payments landscape. For example, we've issued regulations for electronic money institutions. We've also recently launched our instant payment system. One of the biggest challenges to financial inclusion is the amount of cash in our economy. And cash remains king. And so one of the things we've done is introduce this instant payment system, which we call RAST, which means the right way, which is very important for us because we wish to document the economy. And in its first phase, it will do bulk payments from government to persons. Then as the next step, it will work on person-to-person payments, and then person to merchant. And this has been done based on international best practice. So, I mean, we're very proud of RAST. Another innovative step, because all countries in this region have very large populations of expatriate Pakistanis or Indians or Bangladeshis working overseas. So what we've also done recently, what we call the Russian digital account, which allows access to our banks to the Pakistanis, with there are 9 million of those working offshore. And this used to be a major issue. And this digital account can now allow them to open accounts sitting, whether they're in the UK or in the UAE. So again, that's a major step towards inclusion. We're also now in the final stages of our digital banking framework. So we have freestanding digital banks. And that is going through the consultative phase, and then we'll be able to launch that. Then we're doing very exciting work, we hope, on open banking, on an innovation office, and considering matters which are the top of everybody's mind, like a central bank digital currency. So all of these will come in, and we would hope that by removing the need for cash, we will bring many more people into the financial system. Then we move on to something very close to my heart, which is, of course, women's financial inclusion. We cannot have sustainable finance when half the population is largely excluded. And we have seen that the gender gap in Pakistan, as in many other parts of the world, is actually growing. So we will have more men opening accounts and the pace of growth of women's financial inclusion has not worked. So now, after a great degree of consultation, we are about to launch our banking on equality policy, which is actually quite prescriptive. And we are going to mandate actually the entities that we regulate. And this has 5 pillars. One is gender diversity within the financial institutions and the access points. So at the moment, the banking sector only has 13% of its workforce as women, which is very, very woefully low. And we are going to set targets over time for banks to have at least 20% of their workforce being women. Because unless women are in the workforce, customers will never feel comfortable, women customers, to enter banks and be financially included. We will also ask for banks to develop women-centric products and look at everything through a gender lens, which is absent at the moment. And give targets within a certain period of time for the number of female accounts that they are able to open and to keep them active as well. So that's going to be the other pillar. The third pillar in this is women champions at all customer touch points. One of the issues that are faced by, I think, women everywhere, but maybe particularly in some parts of the world, is that they're not taken seriously. And so we're going to have women champions, and we're going to mandate that. Then we'll have, of course, the collection of gender disaggregated data, and of course, a policy forum. The last area that I would like to talk about is areas of market failure. And those are, in the main, 3 for Pakistan, and I imagine that they are similar in the region. The first is agriculture, which is the core of our economy. But the access to finance, while we have been growing, is still through the informal sector, which can be quite exploitative. So we are doing many things in that area, such as the allocation of targets, land record automation, credit guarantee schemes, crop and livestock insurance, electronic warehouse discounting receipts, and of course, refinance schemes. We're also about to introduce something for the youth in the agricultural area and helping to design that in collaboration with the government. On the SME side, while we have about 5 million SMEs in the country, their access to finance is severely limited because of a number of demand and supply reasons. And what we are doing now is to try to improve the regulatory framework. And more interestingly, we are going to be coming up with something we believe, very innovative, in that we are actually going to ask banks to bid for the business so that they are given incentives, both credit risk and cheap rate subsidized financing, so that they actually develop the capacities to lend to SME and do not use their traditional ways. So that's going to be something we do, very exciting, very different. And because normal process is to force targets on banks, voluntarily or mandatory. But this is the time we're going to actually ask banks to bid for this business, which is, I think, is going to be a very interesting way of looking at SME financing. And the last area that I'd like to talk about is housing and mortgages. In Pakistan, only 0.5% of our GDP is mortgages, and that is a major issue. So we've taken a huge initiative along with the government and with mandatory targets, and by creating a facilitative environment to be able to build mortgages, especially for the lower income groups. For example, there are so many people in the informal sector, so we have to make models that will do informal assessment. We've looked at the legal framework. We're looking at capital market development. We are looking at developer finance. So that is something that for sustainable growth and financing for sustainable growth is extremely important. So those were some of the areas that I wanted to talk about. I think we're on a very exciting journey. And this is something that's very important to us. And any support, any ideas are more than welcome. And I hope that this conference and the summit will give us a lot of those. And I wish every success to the summit. And thank you so much for listening to me. Thank you.
Many thanks to Ms. Kamil for that insightful presentation. The economic shock of COVID has certainly created multiple challenges for Pakistan and countries across the region where, as Ms. Kamil mentioned, a balance must be struck to achieve urgent economic growth sustainably. It was very encouraging to hear about the innovative measures being undertaken by governments and regulators in South Asia to tackle climate change and financial inclusion, as well as learn about the State Bank of Pakistan's focus on addressing market failures in financing the agriculture sector, small businesses and housing. I'm now delighted to hand over to our panel moderator, Mr. Ghulam Mohammed Abbasi, as well as a director within the Islamic Banking Division at the State Bank of Pakistan. Mr. Abbasi also chairs the Global Ethical Finance and SDGs Task Force's Working Group on Pakistan. The progress the working group has made in a short space of time is testament to Mr. Abbasi's commitment to sustainable finance. Mr. Abbasi, over to you.
Thank you, Chris. Thank you, Chris. And a very powerful speech by the Deputy Governor, Ms. Sima Kamil. And she rightly pointed about the very important elements on how to balance a growth by using the ethical finance and the sustainable finance. And particularly the areas, I think, which she has highlighted are very much important, and will further discuss these points in our panel discussion regarding the priority sector lending on SME, agriculture, low-cost housing, and then banking on equality and digital financial services. I think these are the areas which I think particularly this South Asian region are very particular to that, and also all these areas support the SDGs, UN SDGs also in a one way or the other. And simultaneously, she also highlighted about the climate and the related risk to the region, and also the initiatives taken by the different countries and as a whole from the region on the green finance. We have today a very learned panel with us, and I welcome you all the panelists here. And we start with the two of the international bankers here with us, Mr. Azhar Aslam and from the Standard Chartered Bank, and Mr. Mujahid Zuberi from the Dubai Islamic Bank, We have also got the mixed from the banking side and the non-banking side panelists. That is, from the non-banking side, we have got Mr. Mohammed Shoaib. He is the CEO of the Meezan investment company, and Khawlah Usman, representing the Institute of Bankers in Pakistan. She's the director of the marketing and the communication strategies. And then we have, in the end, we have got a very learned speaker from Bangladesh, Dr. Shah Mohammed Ahsan Habib. He is the professor selection grade of the Bangladesh Institute of Bank Management. Let me start our discussion on this very important subject by introducing our panelists in much detail, and then I will straight go to Azhar for the question. Mr. Azhar is the head of the Islamic Banking and Governance head at the Central and North region at the Standard Chartered Bank, Pakistan. He's a seasoned banker having the more than 25 years experience in the foreign banks, and almost around 15 years he's with the Islamic banking. He's previously worked in the American Express Bank, Citibank, Dubai Islamic Bank, and now with the Standard Chartered Sadiq. Azhar is a member of the Advisory Council of the Lahore School of Management Sciences, and also he is a member of the PBA Islamic Banking Committee, as well as the Center of Excellence in Islamic Banking and Finance, that is IBAC. He actively participates in the community services and through employee voluntary or social causes like education and the support to the less privileged in the society. A brief introduction for the Mr. Mujahid Zuberi, who is with us as a group head corporate investment banking in Dubai Islamic Bank, and he previously served in the Standard Chartered Bank as head of the commercial banking. Mr. Mujahid has worked in various areas, including the corporate banking and the credit risk and cash management. He has previously also worked with American Express Bank in Pakistan, and his last assignment with them was a country representative for the Pakistan. From the non-banking side, we have got Mohammed Shoaib. He is the CEO of the Meezan Investment Management Limited. And let me share with you that this is the largest investment management company in Pakistan. He has over 27 years of experience, and he's currently, the company is managing the portfolio of around 900 million USD. He's the founder CFF finalist, and he the first when the CFF association was established in Pakistan, he was designated as president, and he remained among the various committees of the CFA. He also a nominee director on the board of Karachi Stock Exchange in 2003, and he the board member of the Institute of Capital Markets in Pakistan. He is the chairman of the Mutual Fund Association of Pakistan, and there's a lot of other academic excellences on his record. Then we have got a Miss Khawlah Usman. She's a passionate marketer and zealous brand strategist with over 19 years of profound experience in integrated marketing itself. She has an enriched experience spanning all communication disciplines. She's recognized for utilizing innovative strategic approaches to drive brand and business results. She also had the privilege to work with the leading Pakistan local international banks like MCB, ABN AMRO, RBS, Royal Bank of Scotland, and the Silk Bank. Her current designation basically enabled her to contribute in the financial sector, particularly the banking, by translating the mandate of the SPP and also the bankers. Dr. Shah, a learned scholar with us. Dr. Shah Mohammed Ahsan Habib is a professor at the Bangladesh Institute of Bank Management. He obtained accomplished postdoctoral fellowship on green banking from Syracuse University, USA. Under his he's a Fulbright scholar. He has got the more than 25 years professional experience. And when I look at his detail of the CV of the curriculum vitae, he also remained engaged with the because he wrote around 180 research papers, studies, and publications, and different national and international journals and the books. He remained at the different committees and forums of the government of the Bangladesh, and he also columnist at the national dailies and which published over 200 newspaper features overall. He is a member of the ICC Bangladesh Banking Commission and a member of the Global Editorial Board of the Asia Pacific. He is also advisor of the Green Tech Foundation in Bangladesh as well. So let me take the discussion to the, first of all, let me go to the banking side and Azhar's experience of a conventional banker as well as Islamic banker. And Azhar, my first question would be just as a global leader, how the Standard Chartered Bank approaches sustainability within South Asia.
Thank you, Abbasi, and thank you, Madam Deputy Governor, for the enlightening words of regarding what State Bank and Pakistan is doing in this space. So I'll start with your questions. To respond to your question, Abbasi, this is a great opportunity for us to give our thoughts on this real topic, as our actions today will determine how our future generations will thrive on this planet. To mention that our Group CEO Bill Winters would be delivering a keynote address tomorrow on financing sustainable future. We at Standard Chartered, being a global player in the financial services industry, are a responsible bank with focus on overall sustainability agenda. And now it's embedded in the bank, and it has three broad pillars, namely sustainable finance, responsible company, and inclusive communities. In the space of sustainable finance, we promote sustainable finance where it is needed most. Our footprint, particularly Southeast Asia, South Asia, and Africa, Middle East, are areas where there is huge upside of every dollar spent in sustainable finance, so that we can support in a very positive way the social and economic impact that UN SDGs are trying to have. Just to give some color on this in terms of numbers, in 2020, Standard Chartered mobilized $2.4 billion towards sustainable infrastructure, and out of which, and another $18.4 billion for clean technology. Out of this, $500 million were used to promote microfinance institutions, reaching over 1.3 million people in markets like Nepal, Tanzania, and Bangladesh. And that's how we try and impact particularly the people in our markets. We also manage the environmental and social risk associated with our financing. Again, in 2020, our dedicated environmental and social risk management team reviewed more than 1,000 clients in high impact sectors. And we made some very courageous calls in terms of how to go about continuing to have relationships with these clients. In short, in this space of sustainable finance, we use our core business to promote sustainable development, delivering finance that derives positive social and economic impact. This not only serves our community, but also provides meaningful contribution to the UN Sustainable Development Goals. The second pillar for our in our bank is we are a responsible company. We work on profits, but with a purpose. Our commitment is to sustainability, is not only to economic activity, but also how we run our business internally. We invest in our people, we promote right values, behaviors and conduct, and support the fight against financial crime. Since 2016, we have taken steps towards an inclusive, innovative, and performance-based culture within the bank through driving a very robust conduct culture. We also put focus on how we can reduce the carbon transition, and how we continue to minimize our impact on the environment. And in 2019, we set an ambitious target to reduce emissions from our own operations to net zero by 2030, which is a key goal for the UN SDGs as well. The third pillar is also very relevant and also resonates very well with what Madam Deputy Governor spoke about in terms of inclusive communities, and also including women in our financial inclusion process. We aim to create more inclusive economies by developing community programs that transform the lives of our people in our markets. Just to give you one example, in Pakistan and globally, Standard Chartered is driving a program called Future Makers with a global initiative to tackle inequality and promote economic inclusion. Our target, which may sound a bit ambitious, but is to raise $75 million between now and 2023 to support disadvantaged young people, particularly female in our markets, for education and creating employability and entrepreneurship for them. So in a nutshell, we at Standard Chartered focus not only in profit, but profit with purpose. And we are very keen to make sure that we continue to contribute towards the global sustainability agenda. Thank you, Baisa.
Thank you, Azhar. I think you made very good point. That's profit with purpose, the last point you mentioned. And also the sustainability is very much impacted due to the COVID. The recent DG Sima in her speech also highlighted the impact, particularly the third wave is causing on the businesses. So there's a huge impact on the sustainability. So if I move on to the next question to my colleague Mujahid Zuberi from Dubai Islamic Bank. Mujahid, what has been the impact of the COVID on Pakistan's economy and how well has the financial sector responded to this challenge? Can you share thoughts?
Sure, thank you, Baisa. I think if you, Madam Deputy Governor has touched in detail in terms of how the financial sector has reacted to the COVID challenge. Just to make a couple of points, I think when we initially went into lockdown in Pakistan and globally, the initial impact was very profound. And even now, when things have to an extent opened up, some of the service sector still is severely impacted because of the COVID guidelines. I think across the globe and Pakistan being no exceptions, central banks and the financial sectors reacted very fast to make sure that the impact of COVID is contained and minimized to the maximum possible extent. I think the fallouts that we initially witnessed were there was a fear of job losses, there was fear of production losses, and we continue to face these challenges. From a standpoint, I think in terms of Pakistan, central bank reacted very fast and very in a very clear direction. Like Madam Deputy Governor mentioned in her initial opening remarks that immediately central bank came out, announced concessional financing schemes. They allowed deferments, and these were primarily defensive things to primarily guard against the job losses and the slowdown of the economy. I think what was icing on the cake, like Sima also mentioned, that the turf scheme that came out and a sizable liquidity was provided by a state bank. That was one single thing that spurred the economy out of a certain recession. What we see from a banking sector point of view, capacity expansions that were scheduled for somewhere around 3-4 years down the line, that this scheme encouraged them to prepone them, and that has safeguarded a lot of jobs in the economy today that will create a lot of additional jobs as we go. And from a banking banking sector, after being classified as a critical sector, has been the forefront of the COVID onslaught. Throughout the COVID period, the worst of it, the first wave or the third wave now, banks have been open for service throughout the country. And from a direction point of view, banks have worked very closely with central bank to support their clients throughout this very difficult period from a financial availability of credit point of view. Banks have relaxed their credit guidelines to an extent to make sure that a lot of the corporate clients, especially the SME side of it, are able to carry on in these difficult times where the economy is slow, where the core markets in terms of export direction have been impacted very severely. And as a result of the actions taken by central bank and the banks and the financial sector in general, has cushioned to a great extent the impact of the COVID. And what we see today, probably Pakistan is one of the better markets, performing markets in COVID environment.
Thank you, Mujahid, for highlighting the key intervention, the policy intervention taken by the State Bank of Pakistan during the COVID, which provided the required support, not only protecting jobs of the businesses, that's the employees, and then also created the further jobs also, and provided the required liquidity support and making the certain important decision regarding the deferment of the principal so that the required liquidity would be available in the market. Thank you, Mujahid. And if we go now on towards the different trajectory, that is, as we know that all the investment decisions are to be taken by keeping in mind the different parameters. Let's see that, let's ask from Mohammed Shoaib, he's the CEO of Meezan Investment Bank, that is, what is the status of environmental social governance factors and how these factors are integrated into the investment management processes. Shoaib, can you share with us your thoughts on the ESG factors and then how it has been these are integrated into the investment management process?
Thank you, Abbasi, for giving me the opportunity, and thank you, the organizers, for organizing this great event. Before I move on to the area of ESG factors, I would like to just comment on some of the discussion that has taken place so far with regard to Islamic finance and the role played by the investment side in promoting Islamic finance, which, as the deputy governor mentioned, ethical finance is very, very close to the concept of Islamic finance, where the concept of financial inclusion, social fairness, and these are the important factors which are very, very important. And looking at the situation in Pakistan, as we know that Alhamdulillah, the Islamic financial institutions have played a tremendous role in promoting the ethical or Islamic finance here, which has led to financial inclusion. So just to give you a very little perspective on that, from the investment side, Meezan Investment launched its first fund, Islamic fund in Pakistan in 2002. And to be at that point in time, the existence of Islamic investment opportunities was almost zero, which is certainly it's very, very surprising for all of us, being a predominantly Muslim country. But Alhamdulillah, in a short span of less than 20 years, what we have seen is that the market share of Islamic funds has grown to over 42%. And certainly, as most of the people here on the forum know, that the deposit size of Islamic banks is also 18% of the overall deposits. So from that perspective, it identifies the huge potential for financial inclusion which exists in this country. And the opening of the Sharia compliant investing has played a key role in that aspect. So coming back to the ESG factors, environmental, social, and governance, again, this is something, the concept which is very, very close to the concept of Islamic finance, which is based on social equality, good governance, and protection of the environment. And this is an area which is also taking a lot of traction in Pakistan. Unfortunately, as far as the investors are concerned, the awareness is still very limited. But I think there's a lot of work that is being done recently to promote the ESG factors in investing, to actually to educate the investors. And now it is very important to understand that all these principles are actually there is a hidden demand for these things. But unless the investors demand it, the creation of the financial products around those factors is very limited. So as soon as there's a realization by the investors, the supply side or the financial intermediaries actually try to fill up the demand. And from that perspective, it is very important to educate the investors about it. So from that perspective, now we have actually seen some of the international funds which are investing in Pakistan on the ESG theme. Now that is one way of creating the awareness. Similarly, I have recently noticed that Pakistan Institute of Corporate Governance is doing some events and webinars on the ESG investing. And at the same time, CFA Society Pakistan is also trying to promote the sustainable investing and sustainable finance through doing several webinars. So from that perspective, as soon as there's a demand from the investor side, although there's a lot of focus from the investor side on the governance factor, and certainly the governance factor is also being covered by the regulators in our market through the issuance of the Code of Corporate Governance and very tight regulatory regime. But so far, the focus on the ethical and the social side has been limited. However, I would say that the other very important perspective from the ESG side is from the perspective of the issuers. So from the issuers' perspective, what we have seen is that there are very large number of companies, especially well-known local companies and some multinationals also, which are actually, when they issue their financial statements, they do talk about the sustainability. They actually issue a sustainability report, and they talk about their best practices in the area of ESG. And these are companies like ICI, International Industries, International Steel, Packages, which make disclosure in their annual accounts with regards to sustainability and also with regard to the ESG factors. Also, I would say, again, as I said, this is an area which is in nascent stage in Pakistan, but the very recent move, as you might have read in the media as well, that WAPDA is about to launch its first green sukuk or green bond. And that is also a very positive initiative. Now there's a realization that there's a lot of demand for such products, green initiatives. And JP Morgan has been appointed as the lead manager and advisor, and there are a consortium of banks working on it. So with these, I would say, from the perspective of also one important area is for these projects, that infrastructure products like which WAPDA is undertaking, it is very, very important to raise the funding. And normally such funding is provided by the public sector. But given that Pakistan is running on a high fiscal deficit, there is a lot of need for private-public partnership. And one of the estimates of the World Bank and the ADB is that over a period of 20 years, Pakistan needs infrastructure funding of about $120 billion. So through these new initiatives about the ESG bonds or ESG sukuk, ESG or the green bonds, where the international, there's a lot of liking and the demand for such financing, I'm sure that if we move that way, then inshallah Pakistan can get the required funding through private-public partnership, and mutual funds can also play a very important role. One important step that CCP has also taken is actually to issue the draft guidelines of the regulation for the infrastructure funds. And I think that is one of the vacuums which was there in the market. And I believe that will pay a long way actually to raise the infrastructure funding. Thank you.
Thank you. Thank you very much, Shoaib. And you have highlighted very important points and also shared the
Yes, I'm here.
Yeah,
Sure.
when you switch the camera off, you know the setup at the start with the 6 screens on the shot. If you switch your camera off, if the editor cuts to that screen and your camera's off, it causes a problem. So you can just, if you're okay to just stay on mute but just keep the camera rolling, that would be great. Thanks.
Okay. Okay.
Sorry, it's Abbasi. Yeah.
Thank you, Shoaib. You have highlighted very important points while explaining particularly on the ESG. You are right in saying that particularly the S component, in my view, is there's a lot needs to be done, and to aware the industry and the people at large about the social impact of the social S component of the ESG. And besides that, I think we need also particularly to working on the whatever the government debt needs are. You have highlighted about the Islamic finance is very closely linked with the ethical finance, and as well as all the SDGs of the United Nations, the 30 SDGs, they are also very closely linked with the Islamic finance. So when we generate liquidity, when the governments generate liquidity for the different projects like the dams or other infrastructure projects, and particularly for the solar, wind, or the hydro generation projects, I think there's a need for issuing the green bonds on the Islamic or the Sharia compliant structures. So it's heartening to heard about the news you have. And particularly I just talked about the how SDGs are closely linked with Islamic finance. So let's ask Khawlah about because Pakistan is among the first few countries when the parliament adopted the SDGs unanimously in 2016. So Khawlah, can you share with us what progress has been made, and what should be the priorities, and what is the role of the financial sector?
Good afternoon, and thank you so much for having me as part of this August panel on a topic which is very close to not just you, me. Actually, if you look at the world globally, we are divided based on so many things: ethnic, color, diversity. But if there is one thing that we all tend to agree are the SDGs, the 17 SDGs, as you rightly mentioned, because we all can relate to it and we can feel the pain, and we all agree that it's high time that we need to address them if we want a sustainable future for our next generations to come. And this is not just for economical growth; it is for the survival of the generations. So, taking it from there, as you've rightly mentioned, all the countries in the UN feel for these SDGs, and Pakistan being one of them. And we have always, ever since 2015, we've been very serious about them. We've been taking tangible measures to translate these goals into action. Due to global pandemics, there have been certain shortcomings, and due to certain unrest, politically and other uncontrollable factors which were being faced by Pakistan. Despite the fact, it is heartening to see that overall index of Pakistan when it comes to SDG is 56.2. Our global SDG global ranking is 134. And if we are striving to, catch up with Sweden and Denmark, who are leading with 84.5 index score. If I look at all the 17 goals, so except for one goal, which is life on land, Pakistan has been successful in either, being on track or moderately improving, or staying stagnant despite all the challenges that we have faced during the last crucial year. So I think Pakistan is on the right track, and there is seriousness when it comes to the government or the Central Bank of Pakistan. And as Ms. Sima Kamil rightly said, strategies, regulations, policies are serious, and product developments are being made, and banks are encouraged to, or anybody is encouraged to, pitch in, give ideas how we can, do better. And then enforceable. There are certain things which are welcome. There are certain things which are being enforced or will be enforced to ensure that these targets are met. So if we look at the financial sector in particular, so these SDGs, if you ask me in my personal, humble observation, I categorize these SDGs into two groups. One are must-have. These are concerning to the basic necessities which are important for our survival, the human race. I don't divide ourselves as male or females. We need to think about that. For the survival of the humans, it is important that these basic necessities are addressed and ensured for the way forward, not just economic, because now the numbers are more not skewed towards just financial numbers, financial benefits. It's so ESG is something that is taking the main stage. So these are basics. There are certain goals which are basic necessities, must-haves, which are non-negotiable actually. The other are based on inequalities. So these are the inequalities. I call them these. If we look at those inequalities, and if we address being financial sector, which is main contributor of the economy of Pakistan, if at least we start off, take one step at a time, and focus our energies towards furnishing these inequalities, we can play a very important role. So inequalities can be, in terms of providing education, access to quality education, training, opportunities, employment. Once you have entered, we need to break the barriers that certain professions have been tabooed as these are male-specific functions, females can't be considered for those. So there are certain things that we can be done. So in this regard, what all need to be done or has been taken up by the financial sector are focusing on digitization, financial inclusion, and working on alternate banking solutions. So if I can share the numbers when it comes to, and digitize, the main pillars for Pakistan have been when it comes to digitization is the penetration in terms of the mobile users. The telcos have played a very important role by reaching out. There are as per the Pakistan Telecommunication, there are 93 million users for the mobile users. That is enabling the banks to actually focus on ADC, which is alternate delivery channels. So if I can quote you the number, the cellular teller density back in 2015 was 60.7. Now it has come up to 82% in December 2020. Similarly, if I talk about broadband penetration, back in 2015 it was just 8.9%, and in just 5 years of time it has gone to 43%. And as I said, there are 93 million citizens having access to broadband. So you can see the huge potential that we have. If we look at the momentum of digitization, in the last 4 quarters, actually, registered mobile banker users have increased by 3 million, reaching to 8.9 million. Volume of banking transactions, so there are 104 million transactions, totaling to over 2.3 trillion, as opposed to 866 billion in 2020. And internet banking transactions being 63 million, volume it being 3.4 trillion over vis-a-vis 1.7 trillion back in 2020. So these are amazing numbers, and as our Ms. Sima Kamil very rightly said, so these are not just that we are saying that we agree with the whole agenda of the SDG. We have taken tangible steps, and statement is to the 5 pillars policy that ma'am is sharing. This shows the seriousness of the central bank of how it can help the government or the global agenda translating those goals into actions. So, and then lastly, not only the digitization and inclusion, and when we say inclusion, not just the inclusion of males, but in keeping the importance of females or other disabled persons, working on their strengths, not on their shortcomings, taking everyone along, which is the true essence of ethical financing. So, and then lastly, as my other panelists have also highlighted, the alternate banking system, which is the Islamic banking, and we being on an Islamic bank, Islamic country. So there is, everybody says that we bank on hope. So if you look at 98% of a recent survey was being done by State Bank and a UK body, and it came out that 98% of the population of Pakistan believes to have banking with no interest. And 96% of the people who were not even using the financial sector were of the opinion that they are even willing to pay more if a financial product offering is offered to them, in keeping the drive, the Islamic banking and potential that it has. So I think a lot is being done, and there is a lot that can be done and will be done, inshallah, with the unified support of the central bank and the financial sector.
Thank you, Khawlah. You have also shared with us your thoughts on very important areas. I think there's a need for prioritizing the SDGs as well. There are certain SDGs which are very critical for the region as well. So in this respect, I recall Chris have highlighted that on the UK IFC platform, where I being the chair of the working group, there's a collaboration going on, and there's a lot of momentum going on. And particularly, we are working on prioritizing the SDGs for the microfinance sector as well as the banking sector. And also simultaneously, we are also conducting the gap analysis about where we are, where we want to be, and what are the gaps to achieve the required level of sustainability. And we are also coming up with a country level report under that platform of the UK IFC and SBP joint collaboration. Let's move on to the Dr. Shah, one of the most experienced panelists here from the Bangladesh. And I recall the Bangladesh different collaboration with the different bankers at the different forums while working in IFSB, IOFE, or in the banking supervision. The Bangladesh is doing very wonderful things on the green banking and the green finance. So, Dr. Shah, can you share with us what the policy and the regulatory developments have been driven by the Bangladesh Bank, the central bank there, in relation to the green and sustainable finance?
Thank you. Thank you, Honorable Chairman, today. Let me thank the organizers to invite me to such a resourceful platform. And I think there's an opportunity as well to showcase Bangladesh in a global forum, and there's an opportunity also for me to learn as well. Now, for us, for Bangladesh, the broad title of this summit, that is the ethical finance, is practically a synonym of what we call as sustainable finance and financial inclusion drives that are mainly through the channel of formal financial institution of the country. And this particular issue, we know that these issues received newer impetus, fresher focus in the context of the COVID-19 crisis, vulnerabilities, we know that. Now, let me inform you that we have got a bank-based financial system in Bangladesh. Yes, we have our capital market. We have got a number of non-bank financial institutions. We have got our insurance companies, but that particular portion is relatively small. And in connection with rural finance, we have got a strong presence of microfinance institution. You all know that. Now, our sustainable finance and financial inclusion drives, these are basically driven by our central bank, Bangladesh Bank. Now, at this moment, Bangladesh Bank, the central bank, has got two separate departments to handle green banking, sustainable finance, and CSR activities, financial inclusion issues. And these are titled as Sustainable Finance Department and Financial Inclusion Department. Now, other than this, We have also got separate departments to handle small and micro enterprise financing, then agricultural financing. So all these departments are collectively trying to support bank and financial institutions to facilitate sustainable finance and financial inclusion drives. Now, one remarkable milestone in the context of green financing, I think, is the introduction of refinancing scheme under Sustainable Finance Department to promote green financing in the country since back 2009. Now, by this time, we have got separate refinancing schemes for Sharia-based Islamic banking, banks and non-bank financial institutions. We have got special refinancing scheme targeting non-bank financial institutions that are operating in the country. Recently, we have installed Green Transformation Fund to support import and execution of environmentally sustainable green and energy projects. Now, all these are collectively supporting, contributing, injecting funds to the banks and non-bank financial institutions to on-lend to the green and sustainable banking sector. Currently, our central bank has a list of 55 green products to facilitate financing activities from these refinancing funds. Now, regarding policy issues, the central bank's issuance of Green Banking Policy Framework and Environmental Risk Management issued in 2011. I think these are pioneering initiatives, and I had the opportunity to be part of working on the issuance of the very first Green Banking Policy Framework back in 2011. Now, after that, the Sustainable Finance Department brought in social issues within the framework of Environmental Risk Management Framework in 2017. Now, we have got a separate title of this framework that is titled as Environmental and Social Risk Management Guideline, that is ESRM, for banks and financial institutions. Our central bank has already developed a very good, I should say, sound reporting and disclosure format for green and sustainable financing in the country. Now, very recently, the Sustainable Finance Department of Bangladesh Bank issued Sustainable Finance Policy. That is basically the upgraded or enhanced version of the very first Green Banking Policy Framework that was issued in 2011. And in this particular Sustainable Finance Policy incorporated upgraded taxonomy and covers broader definition of sustainable finance, covering almost several other aspects like SME financing, agricultural financing, etc. And in addition to that, at this moment, we are in the process to strengthen our environmental and social risk management guideline targeting our banks and financial institution. So I think central bank is leading from the front if we consider the development of green and sustainable financing in the context of Bangladesh. And central bank is having improved very good at this moment coordination with the government agencies. And I personally believe we have already created a supportive ecosystem for the development of ethical finance in the country. Thank you for the time being.
Thank you, Dr. Shah. You have highlighted very important areas, and just in my mind regarding the availability of such provisions in the acts and the laws of the central bank is very important and critical, because there are certain acts and laws in different jurisdictions. I have gone through the different central banking acts where such provision of refinance facilities were not there. Then that created a kind of a legal issues and challenges. Then the liquidity should route it to the government, and then the implementation might took the longer time as compared to the central bank's acts and the laws where the refinance provisions were there, so that you provided cheaper liquidity to the market for the priority sector. I think we heard about the different departments of sustainable finance in the central bank and taking the lead in towards the green banking initiatives, and particularly on framing a new revised sustainable finance policy as well. they're very interesting discussion, and let's have the few quick questions from the panelists. And I would again, if we start with the Shoaib, about Shoaib, can you share with us about how you see the future of the sustainable finance in Pakistan, and how Islamic finance can help in financial inclusion? That is our strategy of reaching out to the people and to increase the level of financial inclusion and the target set under those financial inclusion, that 50% of the population should have the bank accounts and access to finance. So any views on that you can?
Thank you. So certainly from the perspective of the sustainable finance, the role of Islamic finance is very, very important, because as we know that from the perspective of an average person, and we have a population of over 200 million. So at the moment, the bankable population is very, very limited. And one of the underlying barriers is actually that people don't want to, people did not really want to go into banking or on the financial side because of the lack of the products to be considered as Islamic products. And we have seen that with the evolvement of the Islamic banking and the Islamic finance, there has been a tremendous change in this direction. So if we look at the growth of the Islamic banking deposit, I think it is close to about 28% in the last 10 years. And one of the objectives of the National Financial Inclusion Strategy is, I think, the objective is to increase the number of Islamic banking to about 50%, which currently I think they are in the whereabout over 32 to 33%. So from that perspective, and similarly on the investment side, at some point in time, again, this is a historical information, that at one point in time, we only had just one fund, which was NIT. And at that point in time, it was being considered as Islamic, but over a period of time, because of the different investment policy, there was a realization that it was not fully being run on the Islamic principle. So with the start of the Islamic banking and the Islamic fund management side, and then a bit later on the Takaful side, because one of the very important areas which we are missing is that the protection which the masses need, considering the very low level of state support which is available for health, education, etc. So the element of protection or insurance, which is not commonly known as insurance, and in the Islamic terminology, it's known as takaful, very, very important. And in the case of Pakistan, the insurance penetration is one of the lowest in the world, actually. So with the introduction of the takaful products and with the introduction of takaful companies, and there are not very many full-fledged, but the good thing which happened like a few years ago is that the windows were also allowed. Just like the concept of the Islamic banking windows, the concept of windows have been allowed in the takaful. And now we can see that there's a lot of increase in the coverage which is being taken massive. So from that perspective, I feel that with these development of new products, and certainly there are a lot of challenges. There are challenges on the side of product development. There are challenges on the side of availability of assets. But despite that, I think there are very reasonable role has been played by Islamic finance in promoting the sustainability and financial inclusion. And alhamdulillah, I feel, and inshallah, I feel that this will continue. So this is my 2 cents on this topic. Thank you.
Thank you, Shoaib. Thank you, Shoaib. Now, quickly, I will go to the Mujahid and to Azhar, and I would request to be brief because due to the paucity of time. Mujahid, can you share with us about because looking at the agriculture side, because agriculture particularly in the South Asia and especially in Pakistan, if we talk, then this sector is playing a very pivotal role for the economic development. So can you share with us how the climate change impact the agriculture sector, and what are the risks, and what role the government and the financial sector specifically can play to mitigate these risks?
So, I think, like Madam Deputy Governor also mentioned, I think when the governments are developing policies, they need to balance between need and desire. I think given where we are in terms of climate change in Pakistan and its impact, I think this climate change primarily is being sequenced with the need instead of desire. And there is an urgency around reacting to the climate change, which is already very profound in Pakistan. I think if we break it down from a government perspective, what is required in terms of reacting to a climate change, given that we are an agriculture-based economy primarily, the government primarily would be providing the necessary framework and the regulatory framework, number one. Number two, government to a great extent would need to ensure compliance to those policies and implementation of those policies on a day-to-day basis. I think so. Government provides direction and they provide the regulatory framework, and then they ensure compliance to that regulatory framework. When it comes to the banks or the central banks in any of the countries across the globe, I think they are primarily responsible for directing the financing side of it. So even in banking sector, if you look at it, central bank does provide the nudge, as Madam Deputy Governor said, to the broader financial sector to move in a certain direction in terms of policy, in terms of providing liquidity. But at the end of the day, it is the banks who would need to buy into this and move it in a certain direction. So when it comes to banks, they need to align their credit policy and their credit decisioning in a way that environmental impact of what they are approving in terms of credit is properly assessed, and we do adhere to the minimum agreed policy guidelines locally, or if you are really going to be stringent around it, comply with the international policy guidelines around the environment. Similarly, if we move on, the banks on a more practical basis, I think with the nudge of central bank, they need to direct the liquidity or the credit reach at a farm level, so that in a country like Pakistan, technology can creep in. We still at the farm level are working with archaic technology. Farmers do not have the resources to bring in technology, nor do they have the understanding. So their banks can play a very important role in ensuring that under the guidance of central bank, we ensure that the availability of credit at the farm level is available, and the farmers are directed or advised in terms of moving to a more sustainable agriculture model, where where farmers can use technology to optimize the water usage to yield per acre, and that can only be possible if the funding is available. Similarly, I think from environment perspective and the direction perspective, I think if you look at it, the renewables are coming in globally. There is a very important focus on renewables, and we are no exception. So our credit guidelines should follow the renewable guidelines, and to make sure that the credit goes in that direction. Normally, all these projects which are coming in, the credit side of is provided by the banking sector, and it is absolutely critical that that is done responsibly. There is a focus. Central bank has several schemes coming in, whether it is renewable, whether it is ensuring that the farm level credit is available, and it is up to the banks to now take it forward from there. A suggestion maybe in that direction is that we have guidelines where companies which fully comply with Islamic principles, they do have a possibility of a tax break. If we can, at a broader country level, offer such breaks to companies which are model or they are fully complying with the international standards of environmental guidelines, there we provide similar guidelines in terms of tax break, that would be a positive nudge for a lot of corporates to follow that. Like central bank, like Madam said, would be coming in with guidelines in terms of companies to follow a sustainable model in their own offices probably. That's a good start, and something that a financial sector can work with.
Thank you. Thank you. I think this is very important, Mujahid, regarding the use of technology by the agriculture sector. As we know that due to the climate changes, the scarcity of the water, so there must be some technologies in the agriculture to be sector to be modernized with the latest technology, the drip irrigation system and other related technology. Now quickly, Azhar, can you share with us on the, because you are also being the part of the working group on the UNSDG task force as well with us. So can you share with us how the Islamic and sustainable finance basically they collaborate on to meet the UNSDGs? Your thoughts on that? Lots of matter have already been discussed, but if you can, any additional points in your mind for the audience here?
Yeah, thank you, Vaisab. Yeah, the Sharia principles, as they call it, the Maqasid Sharia and the sustainability practices overlap. So the aspirations for having human dignity and public interest and to leave no one behind, it inherently resonates with the basic principles of Islamic finance. And hence, these are very close to each other. A couple of suggestions could be that we can work towards channeling funds to the real economy. This was touched upon by Shoaib as well. And he also touched upon the Wabda bond, which Standard Chartered is also one of the lead advisors for that. It's a green bond. And we can do many of those in Pakistan going forward for infrastructure development, both from not only sustainable finance lens, but from the Islamic finance piece as well. This could be a proper risk sharing mechanism to drive liquidity for corporate finance and capital market transactions. And this would also create a platform for Islamic proposition to position itself as one of the key contributors toward the global sustainability drive. For example, just Islamic financial industry globally is likely to touch $3.5 trillion in 2021, and hence can play a very meaningful role in the overall UNSDGs. So in a nutshell, both sustainable finance and Islamic finance have a lot of commonalities, and hence the collaboration, which is also proved by the working group that we have chaired by yourself, supported by UK IFC and the banks in Pakistan. A lot of ideas that have come through in the various meetings that we have had in the last few months have identified the opportunity to leverage on Islamic finance for the UNSDGs. Thank you.
Thank you. From Azhar, let's move on because very important topic we today discuss on the banking on equality, that is on gender financing. So let's take the two last question from the two different participants, that is Khawlah and also from Dr. Shah, about the financial and social inclusion of women in both the countries, and what the role the gender finance can play in increasing the financial inclusion of women. So first, let's go to Dr. Shah. Dr. Shah, can you explain and share with us the role of microfinance institution in promoting the financial inclusion or the social inclusion, particularly women in Bangladesh?
Yeah, thank you. Yeah, you know that we have got a good number of microfinancial institutions that are basically operating in the rural Bangladesh. A section is also operating in the urban areas as well. And you know that around 95% of all the MFI's clients, these are basically women. And nowadays, from 2006, these microfinancial institutions are part of formal financial sector in Bangladesh. We have established one entity that is called as Microcredit Regulatory Authority that is taking care of MFIs, and MFIs are very active in ensuring access to finance to the women of the country, especially those that are vulnerable. And you know that their models are a kind of credit plus model. They are not only offering credit facilities, they are offering a kind of other support services, training, so that women can be financially independent. So in a sense, because of this presence of a number of microfinancial institutions in rural Bangladesh and in suburban areas, it is possible that women are getting financially independent, they're getting access to finance, and these two factors are contributing significantly to the women empowerment in the country. And we have also in each and every banks, we have also separate desk as per the instruction of the central bank to support women entrepreneurs. Because you know that their challenges are different. They confront greater challenges in every socioeconomic space. We know that. And really, we have very big NGOs, very big MFIs in the countries like Bragg, Grameen Bank, Asha, and these institutions are really contributing significantly in promoting women empowerment in the country. Thank you.
Thank you, Dr. Shah. And in the last Khawlah, can you share with us your thoughts on the gender financing, the role in the financial inclusion?
Okay, so I'll go again.
Okay, Khawlah, can you share with us, as Dr. Shah has explained, that what they are doing in the country on the promoting the women financial inclusion, the gender financing. So can you share with us about your thoughts on what the financial, what's the significance of the gender financing in increasing the financial inclusion in Pakistan?
Okay, thank you so much. So I personally feel that it's high time that we stop talking about males and females. We are all souls. We all have capabilities. We all have strengths. We all have weaknesses. So if we all coexist on the same planet, so it's very unfair that we pour the blame, the responsibility of running the show on just the men. If you look at Pakistan, we have a population of 200 million, over 200 million, with 49% to 49 ratio, 51% being males and 49% being females. So it's not possible for us to sustain or grow if we ignore this important chunk from the mainstream. If you look at in the recent past, we have these cultural barriers, and I think I can speak on behalf of the South Asia as well. That we have these cultural barriers where first priority for education is given to males, not the females. Women face the different challenges, not only harassment, limited opportunities to learn, to work, limited taboos for professions as well. That okay, you can learn till this level. You can work only in these professions. So we need to break those barriers if you want actually to have a sustainable economical future. So not only in terms of education, in terms of employment, when equal employers, financial sector can play an important role. Then in career progression, there should not be any barrier. You females, I always laugh around on a lighter note that I say that I operate in a loop from 9 a.m. till 6 p.m. I work as ma'am, and then 6 a.m. to 9 a.m. I work as mom. So now, when we understand the different challenges, I feel that we are equipped to work hand in hand with the males. So if two hands are always better than one hand. So if we try to work from one hand and two hands working together, I think I rest my case. So what we need to do is, like previously in the financial sector, we were focusing on inequality or discrimination on remote and urban cities. So State Bank or the Central Bank of Pakistan was making it sure that if you're opening 10 branches in the urban city, then you have to open 2 branches in remote cities as well. This was back in the era. Now that we are in the era of digitization, same are the challenges. They are not just talking about reaching out. They're talking about reaching out to everyone, taking everyone along. And that is the only way we can survive, thrive, and attain the sustainable targets or economical growth for all. So, believe you me, I think this is something that we take great pride in. Pakistan was the first one to have first female prime minister. We had the first, Benazir Bhutto, and then we had first Governor State Bank of Pakistan was a female. Then we have Ms. Sima Kamil as the first Deputy Governor of Central Bank of Pakistan, Ms. Sima Kamil. Then we have generals in the army. We have fighter pilots who are females. We have commercial pilots as females. We have crane operators. Crane operators. We have taxi drivers. We have rickshaw drivers. All functions have been royally ruled now by females. So it is high time that we stop discriminating based on gender and give equal opportunities to all, not only in terms of education, employment, startups for entrepreneurship. So, and this is the only way we can dwell and work and have a, more promises sustainable future. Thank you.
Thank you, Khawlah. Very important points, and you share with us in very strong words about what role actually being a female. Also, you share with us what role actually you can play in promoting not only to increase the financial inclusion, but the different sectors of the economy you can play. And of course, there's no doubt about that. Thank you. In the end, I conclude. Let's take the points which we discussed in this panel discussion. I think, despite because this topic and this subject it's so huge, and that is the ethical finance and the sustainable finance, and then comes the under sustainable finance, the whole component, that is the green finance, then the priority sector finance on the SMEs, agriculture, social finance, and all these areas. So I think despite the fact that the topic was quite broader, but the panelists have elaborated very briefly and on some question in very detail about not only the impact that can be that can have by not having the sustainable finance with us, but actually they particularly focus on the priority areas. That is most, I think, we can achieve the sustainable finance that is not by having but without considering, we cannot achieve the sustainability without having the priority sectors, without having the financial inclusion. That is basically it complements the financial inclusion, complement the sustainability. And under the sustainability, we discuss the SDGs, the role of SDGs, and how closely it is linked with the Islamic finance, which is also the agenda in different jurisdictions, and particularly in Pakistan and Bangladesh as well. And then here comes the SME finance, agriculture finance, and the low-cost housing. These are the areas I think they can promote because these all areas are linked with the sustainable development goals of the United Nations. So these all can be accomplished under sustainable banking. And besides that, I think we have also discussed about the ethical finance, ESG factors, and banks' risk management strategies, considering these environmental and social and governance factors in the policies. So all these are very critical to achieve the sustainability in the financial sector. Thank you once again, all the panel's members with us today, and thank you also the Global Ethical Finance Initiative team members for arranging this great opportunity for us at the global level. After these words, let me hand over to Mr. Iqbal, Mr. Faisal at the IBP. Thank you.
Thank you, Mr. Ghulam Abbasi. On behalf of the Institute of Bankers Pakistan, we are proud of being part of this Global Ethical Finance Summit 2021. I would like to share my appreciation and gratitude to Ms. Sima Kamil, the Deputy Governor of State Bank of Pakistan, for sparing her valuable time and gracing the occasion with her presence. Her keynote address was very insightful on the South Asia region and the initiatives of the Central Bank of Pakistan. I would also like to highlight the efforts and support of Mr. Ghulam Muhammad Abbasi, Director, Islamic Banking Department at the State Bank of Pakistan, who has been a focal point for this initiative. He was kind enough to accept the role of the moderator for the panel discussion. He has very well managed it and summarized the complete panel discussion. I would also like to thank the panelist, Mr. Azhar Aslam, Head of Islamic Banking and Governance, Head Central and North Region at Standard Chartered Bank Pakistan, Mr. Mujahid Zuberi, Group Head Corporate and Investment Banking at Dubai Islamic Bank Pakistan, Mr. Mohammed Shoaib, Chief Executive Officer of Meezan Investment Management, Ms. Khawlah Usman, Director, Marketing and Sales at the Institute of Banking and Finance. And lastly, but not the least, our guest from Bangladesh, Dr. Shah Mohammad Ahsan Habib, who is a professor at Bangladesh Institute of Banking and Finance. I'm sure that the outcome of the summit will be tangible measures for the central banks and financial institutions for ethical and sustainable financing for the across the globe. I would like to thank Global Ethical Finance Initiative for providing the opportunity to the Institute of Bankers Pakistan for presenting the South Asia Regional Showcase, Mr. Umar Sheikh, founder and managing director of Global Ethical Finance Initiative, and his team, Mr. Chris Tate and Mr. Fahim Ahmed, for providing us this opportunity. With this, I would like to thank all for sharing their ear to this initiative and giving us an opportunity. Thank you and have a good day.